Be careful when gold's at 5 or 6,000, because who cares? Because by then a loaf of bread's going to cost more too. There's going to be so much other pain in the world that the talking about gold won't be fun anymore. And it's not like you get rich off of gold. If gold goes to 5,000, I don't get richer. It just means I don't get poorer. I don't get poor because I've protected the inherent purchasing power of my currency, whatever that is, dollar or euro or Swiss franc. I'm just saying gold is not sexy. It's a wealth preservation asset. That's it. And that's why in Europe, it's not so hard to hold 10, 15, 20, 25% as insurance. Like we have insurance on our homes or our cars or our health. It's just insurance on currency that's openly dying. In my opinion, it's common sense.
Gold has consistently outperformed major currencies, with a depreciation of over 90% in the 21st century and a staggering 99% loss in the past 100 years. Simply put, gold helps investors to preserve their purchasing power down the generations. MatthewPiepenburg, partner at Matterhorn Asset Management, warns of economic challenges when gold reaches $5,000, underscoring its purpose as a wealth preservation asset rather than a wealth creator. In contrast to the US dollar, the technical outlook for gold looks positive. After selling off over the last 3 weeks as markets turned risk on, the precious metal is now looking at the US interest rate space and pushing higher. Gold is trading above all 3 moving averages and is back above the 23.6% Fibonacci retracement level at $1,972. Meanwhile, Matthew states that central banks are selling US Treasuries and gold piling in response to the devaluation of the US dollar. According to Treasury International Capital, TIC data, foreign investors hold about $8 trillion of Treasury securities, which is about 30% of the market, a large share. The precious metals are supported on this last trading day of the week by a lower US dollar index and a decline in US Treasury yields. The near-term technical postures for gold and silver have improved this week, inviting chart-based bulls to the long sides of those metals. He advises preserving wealth in the current debt cycle, especially for generational continuity. In the face of rising U.S. unemployment and an impending debt crisis, gold prices have experienced a surge of over 1%. Matthew notes that influential figures like Paul Tudor Jones and Jeremy Grantham bought gold due to currency distrust. Now, we present the clips of MatthewPiepenburg's insights from his recent interview with SOAR Financially. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Now, with central banks, in particular in the East, since 2014, they've been net sellers of U.S. Treasuries while stacking physical gold. So they're putting their troops in preparation for an invasion. They're stacking physical gold because they see a U.S. dollar being diluted and diluted and diluted, given the debt spiral that the U.S. is in. So the armies are concentrating at the borders. The central banks are stacking physical gold. I'm not saying this is a gold trader. I'm saying this is common sense. There's a reason there's been record high purchases in the last couple of years since the sanctions began of central bankers buying more physical gold. Not because the dollar is coming to an end, not because the DXY is going to 60, but because the US dollar will never be what it used to be. Never. And I think that's not sensationalism. That's just a change. Empires usually last about 250 years. The USA is not going anywhere, but it's going broke. It's just empirically going broke. America will reach its point where it too will devalue its currency. And that's why even Brent Johnson and I agree that the best asset you can own is a physical precious metal. And again, everyone will say, Matt, you're just talking your book. Brent's talking his book. No, Brent has a much more complex problem. He's managing assets, not just physical and precious metals. It's a far harder responsibility in this environment to go long and short volatility in these times. So Brent and I aren't just colluding to push gold. A lot of guys on Wall Street, from Paul Tudor Jones to Jeremy Grantham, they're not pushing gold. We're just buying it because we don't trust our currency. And so you got to get past the gold bug, bull hype, because there's plenty of it. It just comes back to common sense. You've got to protect the inherent purchasing power of your currency. In Germany and Switzerland and Europe, where our parents and grandparents remember inflation, we remember pain like is unimaginable in the US. This is not a radical thought. America lives in a certain splendid isolation. I certainly did. I still do, in a sense. But you can't be immune to history and its lessons. You can't be immune to the common sense of basic math. And that's what, I try really hard to push without trying to be sensational. As Rick Rule said, I'm afraid gold's going to go up. That's why I own it. I don't want it to go up. Disingenuous and generous. I think deep down, Rick Rule would like to see gold go up. But I think he makes a good point. And Egon and I said this many times, be careful when gold's at 5 or 6,000, because who cares? Because by then a loaf of bread's going to cost more too. There's going to be so much other pain in the world that the talking about gold won't be fun anymore. And it's not like you get rich off of gold. If gold goes to 5,000, I don't get richer. It just means I don't get poorer. I don't get poor because I've protected the inherent purchasing power of my currency, whatever that is, dollar or euro or Swiss franc. And I think that's what, isn't as sexy as Bitcoin. I'm not against it. It isn't as sexy as a SPAC. It isn't as sexy as a hedge fund manager who can promise you 20% annualized. They can't do it legally, but they'll promise you that. None of that is as sexy when you're trying to make money in this market. I think we're at a point in our debt cycle where the key should be preserving your wealth, generational wealth. I've always known. I learned this when I won the lottery ticket in the 2000.com bubble, which I didn't deserve. When you want to have money, the way to be rich is to stay rich. Don't lose money. Whether you're a middle class or you're upper class or you're at the bottom of the class, you've got to try to preserve your wealth. That's true universally.
As per Matthew, gold doesn't necessarily need to back a BRICS currency to identify its importance. Gold prices are currently hovering near $2,000 an ounce after minutes from the Federal Reserve's November meeting revealed policymakers expressed no sense of urgency to raise interest rates again for the second consecutive month running. Furthermore, he foresees a gradual dollarization process, noting countries like Argentina, Japan, Qatar, and Bahrain will still use the US dollar due to limited alternatives. Javier Milei won Argentina's presidential election Sunday on a ticket to overhaul South America's number 2 economy and ditch its peso currency in favor of the US dollar. Argentina's financial markets are closed for a local holiday, but the peso weakened slightly in partial trade to around 353.58 to the US dollar. The currency's value has plunged 875% to the dollar over the past 5 years. With China buying oil in yuan from Russia, which is further convertible to gold in Shanghai, Matthew signals a transformed status for the dollar. Let's get back to the interview.
I still think gold doesn't have to be the backing of a BRICS currency to play a far more important role in the BRICS countries, which include Argentina. Real assets and commodities have far more power in their blocks than they do in New York or London exchanges. So the BRICS and the BRICS plus nations don't have to have a gold-backed BRICS currency to use gold to arbitrage the delta and the difference between their assets and their trades. They don't need a BRICS-backed currency. Real assets in general and gold in particular are playing a bigger role. That's why central banks in the East are stacking gold at record levels and dumping U.S. treasuries at record levels. There doesn't have to be a gold-backed currency, and there doesn't have to be de-dollarization, as I've always said. And from the moment the sanctions started against Russia, Grant Williams and I and many others said, Jim Rickards said it right after, this is a watershed moment in the U.S. dollar. It is an inevitable and irrevocable change in the trust of the U.S. dollar and the use of the U.S. dollar. It never meant the end of the U.S. dollar as a world reserve currency or as a principal settlement of trading exchanges. Of course not. Just like 1971 didn't mean the end of the US dollar, it just meant the end of the inherent purchasing power of the US dollar, which since 1971 has lost 98% of its inherent purchasing power when measured against gold. Nixon didn't kill the dollar, he just neutered it. And what happened with the sanctions in 2022 didn't kill the dollar, it just changed it. Its status, its hegemony has been irrevocably changed. Its supremacy has not changed. And there's a difference. But what I'm saying is the process of de-dollarization is extremely slow. And if you are going to pick a currency to peg against, whether you're Argentina or Japan, Qatar or Bahrain, you're going to use the US dollar directly or indirectly because there is no better option. That doesn't mean, though, that once beautiful prom date that you thought you wanted to invite in the fall isn't going to be the same in the spring or the summer of next year. And there's absolutely no doubt that the respect and trust for the US dollar is irrevocably changed. It never was going to happen in 24 months. And it didn't require a gold-backed BRICS currency to make this happen. And this is where you talk about the US dollar. And this is the great important debate. Brent Johnson and I have very different views on the end game near term for the US dollar. And his milkshake theory, I think, is incredibly well informed and incredibly important. And his basic thesis, I'm not going to speak for him because he can do it better than me, is, and I agree to a large extent, the US dollar has this great big sucking straw. There's a need for it throughout the world. There's trillions, there's over 14 trillion in US dollar denominated debt throughout the world, not just to US banks. It's these major account for SWIFT exchanges. The US controls the flow of trade flows through the SWIFT exchanges with all the major banks. There's the petrodollar, which is a massive demand, which I don't think is as safe as it used to be, but it's still very much there. There is no doubt that there is a lot of ways in which the US dollar is still preeminent and will be preeminent. But there's also no doubt that many countries, over 44 now, are entering bilateral agreements outside of the US dollar. There's no doubt that China can now buy oil from Russia, pay for that in yuan, which Russia can then go to the Shanghai exchange and convert into gold. There's no doubt that's a seismic shift. There's no doubt that there's something important about Saudi Arabia and the UAE joining the BRICS. Saudi Arabia and OPEC are very important to the petrodollar system. I don't think the petrodollar ends tomorrow, but the US dollar isn't what it was when Nixon and Kissinger tried to, convince OPEC to use it to peg it as the petrodollar. Those things are in slow but irrevocable change. There's no doubt that the Chinese did a 27-year deal with Qatar to buy liquid natural gas. They dumped U.S. treasuries 10 years to buy that liquid natural gas because they'd rather have 27 years of liquid natural gas than 10 more seconds of a declining asset like the U.S. Treasury. They don't want to have the U.S. dollar and the U.S. Treasury be the tail that wags their dog all the time.
The gradual dollarization process among countries hints at a nuanced future for global currencies, while gold will shine. Economy Forecast Agency. Experts' gold price predictions for 2023 are optimistic. The precious metal will hit a high of around $2,500 in April 2024. What are your thoughts on the evolving role of gold and its potential impact on the global financial market? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.